Hey guys, what's up? It's Frank here from sunny Bali, and today I just want to give you guys a warning that $10,000 is unlikely to be the bottom. That being said, I am actually long on Bitcoin right now. In other words, I have bought a Bitcoin position. And so in this video, I'm going to try and tell you the reasons why I've actually bought some Bitcoin, but why I also think we're unlikely to hold the $10,000 level. So let's start with why I bought Bitcoin. There's actually quite a few reasons for why I did so. If you enjoy this content and want to see more of it, don't forget to subscribe, like, and hit that notification button as it really helps to support the channel. Before I get started, I just want to let you know that I am not a financial advisor and that trading and investing presents financial risks. Number one is that we have previous resistance at the $10,200 level now turning into potential support. And this of course marks the open of this red candle on the 10th of February 2020. So as you can see, we have 1 week which is closed above that previous open. So that's the first bullish sign. The second bullish sign is that we are just above the 21 EMA and that we've touched it actually twice, and 2 times we have resisted from it. Now, if you go to previous bull run in 2017, you can see that this 21 EMA acted as a support beautifully multiple times before we reached the top. So I wouldn't be surprised if, once we have this confirmed bull run, that we find support over here. Number 3 is, of course, the $10,000 psychological level. Now, admittedly, we have come below the $10,000 level several times, especially on the daily chart. But on the weekly chart, we still have no closes below the $10,000 level. So those are the 3 reasons on the weekly. Previous resistance turned into support, $10,000 psychological level, and the 21 EMA on the weekly. You can't deny that these are significant and potential reasons for why 10K might be the bottom. Again, I still don't think it will be the bottom, but I'll get to that in just a bit. So on the daily chart, we are seeing some interesting price action with these candles. Have a look at these wicks. You can see that on these daily candles over here, we have multiple wicks pushing us right back up. So you can see that we came down to sort of 10,160, came down to 9,980, came right back up. So we had a 1.9% push up here. We had about a 2% push up there. Just every time we come down below the $10,000 level, we get pushed up very quickly and very powerfully to the upside. Now, admittedly, we haven't seen continuation from this yet, but what this does mean is that there are buyers who are interested at this level. And actually, another reason why this is bullish is that if we do hold support here, this base over here will act as a support if we come back down. In other words, if we start moving up here, we go up like this, then if we were to come down, we would find support over here. So it's good to have a support base if you're in a long position. And then the final reason why I have actually entered a long is on the 4-hour time frame. So number one, we have a bullish crossover of the MACD, which is a good sign. We actually had that a couple days ago on the 6th of September. The other reason is this bullish RSI structure. So what I'm going to show you here is what is commonly a bottoming pattern. So first of all, a bullish divergence is when you have a higher high on the RSI over here, but you have a lower low in price. Let's draw that in red so you can see it. So you can see we have a lower low in price, but a higher high in RSI, all right? Now, what's interesting is that although this is a potential buy level in and of itself, what's often thought of as a confirmation is when you cross the previous high on the RSI. So again, you're looking for a bullish divergence, and then you're looking for higher highs to confirm this bullish divergence, essentially, to give you confirmation that we might be on another move up. And as you can see, this previous high was at the 36 level, and we had a fake out over here, but then we went up, and we have generally been in a sort of upwards pattern since then. So these are all the technical reasons why I've entered a long, but really one of the biggest reasons why I've done it is simply the risk to reward. So I entered about 260, and the way I see it is like this. If we get to about, well, actually I have 2 stops. I have one stop at 9,999, and I have another stop just below the previous lows. Actually, it's on Binance at 9,799. So on Binance, we had lows coming down to about 9,850. And so that's where my 2 stops are. So what I do is I say, okay, it's about 50-50 between both of those stops. So my average loss over here is between the $10,000 level and the $9,800 level, which gives me an average loss of approximately 3.5%. But the average profit, what I'm going for is about 8.3%. Why? Because this marks the previous lows over here, which is likely to be resistance on the way up. So I think it's reasonable to enter along here and take significant profit, if not full profit, at this level, and this would already give me a 2.4 to 1 risk to reward. So again, I have longed at this position, but I have a stop loss here. And the thing is, even though I think we are more likely than not to fall below this level, just the small possibility that we might stay bullish means that this trade would still be profitable. Essentially, if we find support over here and we move up, I only need to be right about 30% of the time, and this trade will still be profitable. In other words, I could be wrong 70% of the time with this trade, and this trade will still be profitable. So that's why I've entered along. Okay, but all that being said, I think that either short term or medium term, we will likely see lower lows. And that can come in two scenarios. The first scenario is that we really just break down from here and immediately go down to 9,200. The second scenario is that we have a move up from here, give some hope to the market, and then just tear it away from them and come back down to 9,200. Now, in terms of TA, although I mentioned before that it's bullish that we have all these wicks going up, what's not so bullish is that we have tested this level so many times. The fact that we've tested this level multiple times means that if we test it again, we are very unlikely to hold it as support, because the more times you test a level, the more times you come down to it, the less buyers there are, all right? So it's bullish that we've pushed up from here, but even right now as we speak, we're coming down towards this level. We would have to come down and test this sort of 9,900 level. And if we get to that, I think it's unlikely that we will find support. That's why I have my stop losses there. And honestly, I might even consider shorting if I'm in a sort of good position, if I'm at the laptop and I can get into a trade. But the real reason why I'm still a bit bearish in the medium term, especially for Bitcoin, when I say medium term, I mean sort of the next several days or even weeks, is this chart, the S&P 500. So as you can see from this chart, back in March, we had this horrible crash, and I've told you guys about how correlated the S&P 500 is to Bitcoin and the whole crypto market. And what that means is that if the S&P 500 makes another dump like it did here, it's going to look very bearish for Bitcoin. Now, one thing which is worthy to note is that when a market does things like this, where it has one big move down, 35%, and then it has another big move up, what is very unlikely to happen is that we just have a very slow and steady move up, keep on going up and up. What is much more likely when we have big moves like this, when we have a lot of volatility, is that the volatility continues, even if not quite as intensely, but still likely to continue. So what does that mean? That means that instead of doing something like this, where it just sort of slowly, steadily goes up, we are much likely to see something like this, where maybe we have another move up, but then we have a violent move down, maybe we have another move up, maybe we kind of consolidate a little bit, but then we have another violent move up. Maybe, basically it means that it's less predictable and we're likely to see volatility. Now, unfortunately, this previous week has been bearish. Of course, the stock market has not opened today yet because it's still Labor Day in the United States. But this red week that we've seen here is certainly scary. It's pretty much engulfing the whole of the previous candle. So it's entirely in the realms of possibility that we will see another sort of 5, 7, maybe even 10% move down on the S&P 500. And if we do, it's very unlikely that Bitcoin holds the $10,000 level. In fact, it's almost impossible that Bitcoin will hold that level if we see a 10% drop from here. And as I say, even if we do sort of find support here and move up, again, it's still, because of all this volatility, it's still very unlikely that we move up without seeing another sort of violent drop down before recommencing the bull run. So as much as it sucks that we are still correlated with the S&P 500, this is just the way it is. Now, I did mention in a previous video that the bullish thing about this is that when we do find a bottom, when the S&P 500 does bottom out and then move up again, Bitcoin in its history has moved up much more significantly, much faster, much more powerfully than the S&P 500. So that's the silver lining, basically. Now, the other reason why we should potentially be a little bit bearish on Bitcoin in the short term is the DXY. Now, the DXY has certainly been in a bear market for several weeks now, many weeks actually, ever since March. And I mentioned in a previous video how every time the DXY, or the dollar index, which is the dollar compared to a basket of other fiat currencies, every time this is in a bear market, it's good for Bitcoin. Bitcoin has been bullish. Every time it's in a bull market, it's bad for Bitcoin, and Bitcoin has been bearish, all right? So right now, since March, we have been in a very steady downtrend. However, the daily chart is showing signs of recovery. And those signs come in the form of multiple bullish divergences here. You can see that we've had a higher high over here, another higher high, and another higher high on the RSI. And what is this corresponded with? A lower low, a lower low, and a lower low on the DXY. So this leads me to believe that we are likely to see a move up here, that it's more likely than not that we actually have a relief bounce over here before continuing the weekly downtrend. And another factor which backs up this hypothesis is that we also have higher highs on the MACD over here. So what this means is that the DXY could very possibly see higher highs over here, and this would not be good for Bitcoin, at least in the short term, since Bitcoin generally thrives when the DXY is in a bear market. That being said, even if this does happen, the DXY would have a long way to go before we get to a bull market. So what I said on the daily time frame suggests that we might see a move up here, but that of course doesn't mean that we couldn't just come down lower, and indeed that would be continuing the weekly downtrend. Nonetheless, if over the next 2 or 3 weeks we see a move up for the DXY, this would not be great for Bitcoin. Alright guys, that's been it from me for today. As you can see, trading is not easy, and although I'm in a long position, I think it's more likely than not that I will get stopped out here, and the only reason I'm in it pretty much is because of the technical indicators and because of the fact that there's a solid risk to reward. So although I am actually more bearish than I am bullish over the next coming weeks, it's worthy to note that we should be super bullish long term. You have the American banks who are now accepting custody for cryptocurrencies, or at least in the process of doing so. You have PayPal talking about adopting cryptocurrency. You have Visa Card who's looking into it. As you can see from this article on Forbes, Visa, MasterCard, and PayPal are changing their tune on Bitcoin and crypto. You have, of course, all the institutional investment which has been coming in. So really, there's nothing stopping from Bitcoin to go on a massive bull run over the coming months and years. It's just the next few weeks which might be a little dodgy. Okay guys, so good luck investing out there. I hope you limit your losses. I hope you end up catching the bottom if you can. And with that being said, I will see you in the next one.